Hi guys, how's it going? I hope you have an amazing weekend. I'd like to show you a breakdown video of this trade I took on EURUSD on Friday, why I got involved here, what levels I marked up, and what levels I was exactly looking at during the whole week. So let's get into this. Last Thursday, price came back up during New York session and rejected off of this 4-hour premium bearish fair value gap. Then on Friday, as I marked up this level on the community channel, price rejected off of this 1-hour bearish inverse fair value gap during the London lunchtime and then started aggressively pushing lower during New York session. Didn't give me any entries. Then Monday came, I marked up this 4-hour bearish BPR. The price didn't climb up to this level. Again, just the same story. Started pushing lower aggressively during London and New York session. And then actually when Tuesday came, what you can see is that price started slowing down, started building a lot of liquidity. And before Wednesday opened up, price gave us two 4-hour bearish fair value gaps. They were both premium levels. London actually didn't climb up all the way. It gave us an inducement of this level, came up, created a hell of liquidity in here. And then when New York session started, rejected off of this 4-hour bearish fair value gap. Again, didn't give me an entry, but the levels were very clear, started pushing lower again. And then when Thursday came, we already had a 4-hour bearish fair value gap. Again, price didn't come up all the way, except after New York session. Started pushing lower, didn't manage to make a lower low in here. So we could get rid of this level actually, because before Friday, this level was the strongest visible level. It was a daily bearish fair value gap. And as I mentioned this on one of my breakdown videos actually previously, that a bearish order flow on the daily is always confirmed if price comes up to a bearish fair value gap and then continues, start pushing lower and lower. So I was expecting price to do this for me. There was a lot of liquidity in here. As you can see, price was just building liquidity all the way. So we had some liquidity here. And then what happened basically during London session, price took out this liquidity and then made a bearish break of structure. And actually this candle was a news candle which happened at 8:30 on Friday. And then I basically waited until about 8:40, a few minutes after I placed my order to this level, to this bearish fair value gap, left my stop on the top. And that was it. Price tagged me into the trade, started pushing lower. I took my first partials at the daily open level, because there is always a strong rejection or at least some kind of reaction from the daily open. Price then started pushing lower. I took my second partial around this level, just below Asia session, because Asia session is also a potential liquidity level. And I had my targets down here actually, which wasn't hit on Friday. And then after New York session ended, price started hovering around and it didn't manage to make this low again, a lower low, and it started climbing up higher. And this was an indication for me it was already Friday. I didn't want price to come all the way up and take me out, so I trailed my stop loss above that high, because there was still a possibility for price to reject from the daily open level and start pushing lower, especially that there was a tiny fair value gap in here. It didn't do it. It came up and then it took me out with actually that candle. I was taken out. So that was it, guys. It's very simple stuff. What you need to do is every single day is mark up the daily open level, Look for opposing PD arrays on the 4 hour, on the weekly, daily, 4 hour and 1 hour. Fair value gaps, inverse fair value gaps, BPR, and that's it. You don't need to overcomplicate it. It's very simple stuff. Once you understand this is easy stuff. It's not complicated at all. And then you just wait for a market structure shift and get involved. If you have a strong high somewhere, let's say something like this, you only need a break of structure. If you have a weak high and the next day comes, you want to see some kind of liquidity isolation before you get involved. That's the liquidity isolation there, because that's a weak high, so this will potentially be taken out. If you have a strong high, a simple break of structure is enough for you. The third option could be for you is that you have a weak high, when next day comes, price starts creating weak highs again, it does a liquidity isolation again, and once price does this liquidity isolation, you know that this is a strong high, it will be protected. So after break of structure, you get involved here. These are the three options you have. This is very simple stuff. Strong high will be protected. Another strong high will be protected. Just get involved after break of structure. It's very simple stuff. If you have a strong high, a break of structure is enough. If you have a weak high, check the daily, check the 4 hour, check the 1 hour. If you have a weak high in here, if there's lots of liquidity here, always obviously mark up the opposing PD arrays. So the reason you get involved that is because there is some fair value gaps, inverse fair value gaps, BPRs on the 4 hour, on the 1 hour, on the daily, or maybe even on the weekly chart. You know, you want some kind of level. You want to mark up these levels before the daily opens. This is where the daily opened. Yeah? This is where the daily opens. Then you mark up opposing PD arrays. If you have a strong high, a break of structure is enough. If you have a weak high, mark up the opposing PD arrays and wait until price gives you equal highs. Take that out, break of structure, and you get involved there. You get involved there. If you have a weak high, mark up the opposing PD arrays, and if price next day reacts from that level but starts giving you weak highs, this is liquidity. Wait until it does this during the session. This is a liquidity isolation, guys. Once it isolates the liquidity, this high will become a strong high and will be protected, and you get involved there. And then you follow the order flow. Simple stuff, guys. Do this and you will be profitable. I can promise you that. If you're interested in further breakdowns, if you're interested in market breakdowns, trade breakdowns, just sign up to my channel, give me a like, give me a subscribe, and you'll get all of these updates. Have a great weekend. Peace.